Holy smokers, what happened to this stock? IRobot here. This thing was up 8% after hours at some point. Oh gosh, almost over 10%. And now it's down 4%. So we're going to take a look at these earnings because I'm very curious here as to what's going on. As you remember, if you saw my report to watch video, I pretty much told you, as far as an EPS standpoint, I expected there to be either a massive beat or a massive loss. I didn't expect him to be anywhere near that analysis. The expectations, I just didn't see happening. I thought it would be on an extreme end of either side. And the revenue, I thought it would be a beat. So let's take a look at these numbers as we see the stock kind of tumbling right now. Holy crap. So overall, I just want to say, hey, I'm not going to say I'm the Swami. I'm just going to say that I know the stock, and I've been in it for a while, so I know how these analysts treat it, and they're always wrong. So quarter three non-GAAP, I've seen them be wrong on both sides, by the way. Both extremely wrong in the upward sense and extremely wrong in the downward sense. But non-GAAP EPS of $2.58 beats by $1.58, but a GAAP EPS of $3.27 beats by $2.58. That's freaking incredible. That's just an incredible number right there. That's extremely shocking, and you see there's a massive benefit, obviously, from the removal of a lot of the tariffs that they've had to deal with. And from a revenue perspective, I think this is a smasher of an earnings. Holy crap! $413 million, which is up 42% year over year, beats by $98 million. Oh my gosh, they increased by one third extra earnings. Holy crap. I think that is a massive beat. So I get why the stock was up so big. And I really need to do some more as far as where's this downward pressure coming from, I don't know what investors are doing. Are they taking profits? I don't know. But I think overall this stock deserves more credit than that just from these numbers. We'll take a look, obviously, at some more details here. The company notes substantially stronger than expected orders from retailers tied to favorable sell-through trends. Need to also mention in this next quarter coming up, you need to mention that obviously Amazon Prime Day's in the next quarter coming up. So I'm curious on that aspect. So anticipated demand from upcoming holiday season and incremental orders to support certain customer events, as well as robust direct-to-consumer sales growth. An 86% increase in premium robot, which is the list price of $500 or more, was recorded. So people are buying the high-end stuff, okay? IRobot estimates online orders grew approximately 70% and represented approximately 60% of Q3. And you need to mention, obviously, this is a big part of it, because part of this quarter, I would say it's plausible that some of the people that carry these products, as far as retailers, were shut down in some states. So you need to mention that online's pretty big, and the fact that they were able to post those numbers is pretty big. For the full year, they're anticipating revenues of $1.36 billion to $1.37 billion versus a consensus of $1.23. That's massive beat in terms of that. And EPS of $3.43 to $3.53, which, consider this quarter to see it flat the rest of the year, not exciting, but all things considered, they've had to deal with a lot in terms of profitability this quarter, from tariffs to really just overall extra expenses in terms of transport, materials, all that. So I get that. Looking obviously into more detail as we do. We want to look at the financial performance highlights. We love seeing that. Revenue from the first 9 months is up 12% year over year. Still very big for in the middle of a pandemic. 36% overall unit growth. Big stuff, as you see highlighted. Yeah. Big growth. 75% growth in the U.S. Huge. 22% in the EMEA, and 12% growth in Japan over the prior year. So U.S. growth is pretty massive on that aspect. Online orders grew by 70% and represented 60% of the third quarter revenue. direct-to-consumer revenue of $35 million grew by 155% year over year. And again, the direct-to-consumer, pretty interesting stuff. Obviously, you think about the apps, the products that they offer, really just digitally. That's kind of the focus here with this direct-to-consumer, which could be a big aspect for them as far as that's concerned. So keep an eye out for that. Third quarter GAAP operating income $81 million compared to 42.6 of last year's quarter. Pretty big on that aspect. Good growth. Net income per share of $3.27 compares to $1.24 last year. That is an incredible growth in that aspect. So I can't lie to you. GAAP net income per share for the first 9 months has been $4.69 compared to $2.27 in the same period last year. That's doubling your net income line there. Pretty beautiful. I think that's quite exciting. So, the United States Trade Representatives extended the tariff exclusion, obviously, as I mentioned, until the end of 2020. Pretty big there. On August 25th, they unveiled personalized cleaning experiences powered by the IRobot Genius home intelligence platform that gives users greater control of where, when, and how robots clean. The iRobot's home app was redesigned to maximize the benefits available with the iRobot Genius platform. On September 17th, they introduced the i3 Plus, stylish new Roomba that offers intelligent navigation, self-emptying capabilities with clean base automatic dirt disposal. Nice, we love that. An expanded range of personalized cleaning features powered by the recently launched iRobot Genius Home Intelligence. On July 29th, they introduced the Root RT0 coding robot, an easy-to-use, customizable coding robot that brings classroom learning to your home. I'm curious on that, what that necessarily looks like for them as far as the capabilities, but it's pretty cool if all things work out for it. For the 6th consecutive year, they were featured in Amazon's Prime Day. Oh yeah, they were, and they sold a lot of them to my knowledge. The company's community engagement, connected owners who have opted in to the digital communications grew 7.8 million to 7.8 million, up 45% since the start of 2020. Pretty nice. And Kieran Smith joined the company as Chief Marketing Officer. As you can see that. Pretty cool in that aspect from a financials. For the full year expected, gross profits, not too bad from a gross GAAP perspective. Not too bad. Operating income looking good. I mean, these are numbers that look good. So I'm really curious what the issue is. I look at the balance sheet. We'll take a look at that. Total current assets right now. You see a 9-month comparison. $807 million versus $594 million, so good growth there. Total assets of $1.1 billion versus $920 million. Good growth there. $200 million growth there. We love seeing that. Total current liabilities of $264 compared to $202, so that rose, but total current assets rose by a lot more than that. And total liabilities in general of $334 million versus $268. Total assets rose by a lot more than that. Equity has risen quite a bit, $780 million versus $652 million. That's a good balance sheet for a company of this size. That is a very good balance sheet. You're talking about a total balance sheet covering $1.1 billion, but an equity of $781. That is a peak balance sheet right there. It's a beautiful balance sheet. Stock valuation, I really don't think is bad. I don't think the valuation of the stock is bad at all. Again, my levels are in the 50s, so it's hard for me to. It hurts for me to buy this sometimes. It does. But if this thing's down, I mean, this thing is definitely a buy around $90 in my perspective. It's already risen quite a bit this year, and you should have bought more earlier this year. I mean, up around 100% this year. Should be up actually a lot more compared to what these earnings look like. So. If I find more info, I'll obviously post an update in a comment or something as far as that's concerned. Maybe it's a guidance issue or a conference call issue, but this thing's tumbling now for some reason after a stellar earnings. So I hope you enjoyed this and you have a good day.